This is a session recap for the 7th day of May, and this morning we were watching the dollar index as it broke out, which is the telegraph, which says we want to go down. That's all they're telling you. And below this line is when you'll be proven that this fib that they're going down. All right, but they've already telegraphed their intention. Bears are here waiting for FOMC. So this is all about FOMC this afternoon. All right. So right now, they say we're going down. We got a zero line break to the downside. MACD always points the way. All right. So there. All right. That means euro down, dollar down would be euro to the upside. Our target is up here, actually the 1.618 at 1424. And after FOMC, we'll see if we get that. Put slope support across this last piece. All right, right there. And trade one is here and trade two is there. All right. Then FOMC is going to happen before the 5 o'clock when the New York fix happens, which means the ATR is going to be after that. So remember, when you come up here, all right, if you do trade it up and you get up here to the ATR, you move your stop and hold because in a couple hours you're going to get a new ATR and it'll be up in here. And then you add a position up in here. All right. Forward to pound dollar. Same thing here. Okay, so we identified this morning. Has it done anything? Did we miss anything? We didn't miss a thing. There's the blog post this morning. That's what we're looking at. It ain't gonna go because of FOMC. We got a double top up. We got a top up here, the day chart top. So most likely it's going to stop there and turn to the downside. No matter what, it's going to turn to the downside. It may still go up because why would they go down? Because professional buyers won't buy at the top. They got to come down so the professional buyers can buy. So watch for that and watch for the day chart top. Dollar Swissy following the dollar down. Oh my gosh, we got a breakout of the flag pattern. Okay, it's a big flag. All right, there's the break, hook, and go. Now there's no room now, but remember this afternoon at 5 o'clock you're going to get a new ATR, and this whole thing right here gets added to this down here. So you're coming down to this area down in here this afternoon. All right, because the ATR is going to change 1 or 2 pips. That's all. All right, but you got, see, they're telegraphing. See, they're telling, what are they doing? What are they and why? They're telegraphing we're going down. We're going to open and close the candle below this so everybody knows. See? Well, it depends on how the economists think. I don't know what they think, Mark. Typically, that's right. If the interest rates are up, money flows to the dollar because it pays more money. All right, but we're in the middle of tariff season. Tweets from Donald Trump and tariff stuff and Canada freaking out and there's too many things that are out of our control. All right, and we don't know, so we wait and see what they do. We don't have a clue. I'm not an economist. Are you an economist? No. So we wait. We don't know what they're going to do. But look what they did. They hit this big mamma jamma line again. Over and over and over again, they've used that line. Right? So it's a heck of a line. And they tested breaking it and they weren't able to. Yeah, you can get sideways moves that are very, very sideways. Yeah, here's one here. All right, so here's the break. Let me get rid of this one. All right, put this little line on here. All right, so there's your little bear flag. There's the break. Okay, so all right, here's the break and the hook. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. 11 candles. There's the hook. There's the go. See that, Annika? All right. Now, typically, we like going to do break, hooks, and goes. All right. That'll happen at 8:30 in the morning. All right. If it's later than that, then they'll most likely do something like this. And this is what you learn when you do 300 break, hook, and goes. All right. When you do 300 of them, you're going to go, is that a break, hook, and go? And you go, I don't know. Well, let's look. Did they break to the downside? Yeah. Then did they come back up to it? Yep. Okay. That's a break, hook, and there's the go. All right. So it took 11 candles to make that happen in this instant. All right. It doesn't always do that. All right. Let's see if we can go back here. You can see one right here. This one here. Break. 1, 2, 3, 4, 5. Hook back up, and now we went. See, the hook brings the buyers in because the buyers won't sell it. The sellers won't sell at the bottom. Well, that's not much different, but it's the top. See? All right. So there you go. All right. Here's another break, hook, and no go. It doesn't keep going. It stops. All right. All right. All right. Dollar yen. Dollar yen, we're waiting for the break to the downside with the dollar going down because the base currency is the dollar. Now, this will be a great opportunity because they got all the ATR. So if you're looking for something to trade at FOMC, it might be this one and that pound, either the pound or here. All right. So FOMC comes out and it comes out negative. The market reacts negatively. All right. You got to trade this with entry orders. Don't forget. Okay. So you can trade it here, trade one, trade two, and trade three right there, or you could trade one and trade two. Either way, and you're going to hold for this bid down here. Dollar yen is pretty nice for after FOMC. All right. Pound is not quite as good. Over to Aussie dollar, right? ATRs are coming way, way down. It's coming down, but it shouldn't be doing that, right? It should not be doing that because the dollar is Aussie dollar. What's the dollar do? Going down. Therefore, the Aussie should be going up. It's not. So then this has got to be, even though it broke the zero line break, it just kept on going, right? It's got to be considered a pullback to go again to the upside. The structure today is down, but overall the structure is up because we're making higher lows. See that? All right. So I don't have a channel on here because it will bias me. So I don't have a channel on here. All right. As soon as I put that channel on, I'm a buyer. Okay. Are you a buyer, Scott? Yeah, I'm a buyer. See? All right. Now I'm looking for a bounce. See that? I don't want that on there because it's coming down. Could it do that? Absolutely. So I don't put the channel on. I wait for the reaction. I wait. The number one trade to learn is the wait trade. Wait for your trade to come to you. I don't think this is really tradable until we break to the downside, until we break this bottom right there. And there's the two trades for the big boys, which you can see. All right, and that's going to require that the dollar come out positive today. If the dollar comes out positive, watch for this target and this target tonight. All right, we don't know that yet. Euro yen. All right, we're waiting for it to top out and turn. We have an ABC already in play, A, B, C, right there. All right, so now they're making the turnover. All right, it takes a while sometimes to make the turnover, not always, but they're making the turn. All right, so there's the trade. And remember, this won't be here this afternoon. So you'll be targeting this bottom right here where the fib is. Remember, that space right there is uncontested. All right, this is why you got to go do your 240 fibs. If you don't do your 240 fibs, you don't know that. And you'll make mistakes. Go do your 240 fibs. All right, 300 of them, all done at once. You got enough time between now and FOMC if you're going to be in front of your charts. Don't go trade. Don't go looking to make pretty charts. Go find a weakness of yours and do that weakness until you don't. It's no longer a weakness. All right, same thing with pound yen here. All right, pound yen was a live trade yesterday, and we did make a little bit on it, but topping out, closing reverse, closing reverse. What are they telling you? What are two closing reverses up there telling you? We exited the buy. That's what it means. All right. So we hit ATR. We took that out. So now the trade is to the downside. All right. And you can see we make lower highs, lower highs, lower highs, lower highs. All right. So once it turns to the downside, breaks through slope support, which is this last little piece right there, this last piece, there's the trade. And remember, the ATR is no longer in play until after 5 o'clock tonight, all right? Because it's got a catalyst today. It could go 200 pips, which has nothing to do with the ATR. It has to do with the reaction, all right? So you got two big wide open space areas down here, one here and one here. Don't miss them if it goes down, all right? Over to New Zealand dollar. Can't hardly trade it at all because the ATR is too low. It's only like 58 pips or something. What is it? 65. Right, so if it moves 10 pips, down. No, the bodies tell you it's a close and reverse, Paul. The wick tells you price up there, but the bodies tell you it's a close and reverse. All right. That makes sense, Paul? Okay. Joe, with the economists saying 96% think the Fed will stand pat, it seems like there should not be a big reaction unless Fed changes its narrative, right? That's what ends up happening. Right? So if Fed stands pat, what would the structure be? The structure would be intact. It's if the Fed doesn't stand intact, then and stay pat, then the structure is irrelevant. We got to create a new one. See? All right, nothing to do on this one, not enough room to trade it. Over to Aussie yen. Aussie yen, we're structured to go down. We had an announcement last night. You see what they did with that? It came all the way back. Here's where that started. They got almost all the way back to it right there. Right. So what do we got now? Well, the structure still is intact. We got a flag pattern being built. That's how we got into the flag. That's how we're coming out of the flag. So the target for the flag is here. Remember, the ATR is not here right now. You can just take them off because they don't exist right now because of FOMC. All right. So your next trade is trade one is there and trade two is here. All right. Moving your stop at the 1,000 and 270. Now, if you break that, you can see your next trade is here, moving your stop at the 1,270. All right. Because if you've done your 240 fibs, you know what they're going to do. And you know the statistical probability. And you need to know your statistical probability. Well, I don't know what it is. You don't have a number? Then you're not a trader, you're a gambler. Go do the work. Now you know. Whatever your number is, it's 92% going to go from here to here. And if I break that, it's 92% going to go here. Whatever that number is that you come up with is your number. All right. So looking for a continuation of what? Structure. We're looking for a continuation. If they stay pat, this should go down. All right. If they don't stay pat, this should go the other way. All right. So what do we do? We're waiting for that information. Can't trade euro pound anymore. Boy, it was nice for 2 weeks, though. I try to get everybody to trade it. Not anybody traded an alert. I put an alert out almost every day on euro pound, and not one person traded it, even though it pays 27 to 28% more money. All right, structure's down. We're looking for a top down to the bottom again. Right? Remember, the ATR is not in play this time. All right. So where's the trade? If it tops out here, your trade is below here with an entry order there, and then another entry order here. You're a fast tracker, another entry order there. There's the trade right there. All right. To the downside. What if it goes up? You got no room up here. Don't even think about trading it up into a day chart and into a channel line. Don't even think about it. Swiss yen. All right. Swiss yen reacted, went up last night, straight up. Why? Dollar went down. Swiss yen goes opposite that. Went right to target. Off a close and reverse. And this is the bank. There's the banker, the big boy. There's the follow through. See that? And there's the continuation of the follow through. All right. That's who you trade with. That follow through. All right. Watch for it. We're going up. All right. Watch for it to come up here. Could do a double top tonight up there. Especially if the dollar goes down, look for a double top here. Well, that's a long way. Yeah, but it's a Swiss yen. It can get there. Pound Aussie. All right. To the pip, up to its target. No problem. I wonder if they knew where the ATR was. I don't know. That's Scott. He's so stinking lucky. All right. As you can see, you're still just doing a box down here. All right. So the big trade is up here, as you can see. You can put the box on right here. There you go. Okay. I see the box. I'm in a box. I break up in this area. Wow. Do I want that? Yeah, I want that. All right. All right. To the pip to its ATR. All right. Watch for that fib right up there and maybe the 4.236 tonight. MACD tells you you're pushing up. All right. Now, pound Aussie typically goes with the dollar. All right. So if dollar goes down, then it should go down. You got to know your correlation. All right. So there, dollar went nowhere last night and this went up. So what's happening? Are they going up to go down? Most likely, but we don't know that. And they may be going up to go up. So what they got to do? They got to prove it. Where are they going to prove it? If they break the top of this range. All right. Make them prove it. You're New Zealand. All right. We're up here where they got to talk to us. They either break out up or they respect the channel and go down. Right now, they're telling you, we're going to break up. All right. Yeah, but it's only one candle out. And it could be a false breakout. That's true. So that's why you wait for the confirmation. What would be the confirmation? A break, hook, and go to the upside. What if it doesn't do that? It comes down. Break, hook, and go below this line, and you're in. Right here. See? You got to break barriers. All right. There's the trade to the downside. Break, hook, and go to the upside. There it is. Wait for it. All right. Structure is down. So the higher probability is to the downside. Not to the upside, but we do have a breakout. This is where they got to talk to everybody. And don't forget, they're telegraphing what they're trying to do right now. That's all they're doing. We're going to try to go up. Now, New Zealand, as I say, the same thing. It went up to the pip to its ATR, stopped dead. I wonder if they knew where the ATR was. I don't know. It's a real estate of the week. So there's our trade right up there. right there. That's where it is. And if FOMC comes out and it decides to go there, target the 2.618. New Zealand yen. Oh, nice. Got a breakout and pretty significant here, if you can see. All right. So they're telegraphing their intention is to go down on New Zealand yen. All right. Now, does that make sense with the Swiss yen going up? No, it doesn't. All right. But it is what it is. You always go with what the chart says. All right. We're making lower highs, as you can see. All right. If it starts breaking down, we're looking for the 2.618 tonight. If it goes down. If it goes up, we got room to the top. We look for the day chart top. We're in a range. We can trade it either way. Ooh, Aussie Swissy. How about that? Is that pretty concrete what they're trying to do? What do you think? See how clear that is? MACD said, yeah, we're going down. All right. Now, Aussie Swissy only has a 56 pip ATR, so you can't trade it. All right. Too bad, because it looks perfect. All right, pound Swissy continues its move down. All right, and you can see where's the equilibrium? Where are they trying to get to? Right there. And they may come down here and just stop right there. Not even hit the ATR. All right, but MACD says, watch for that. So watch for that trade right there tonight. All right, pound Swissy. All right? The chart's telling you what to look for. How do I learn the chart? I take each piece methodically so that I know each piece like the back of my hand. Right? Aussie, New Zealand. All right. We're right here where they got to talk to us. Right at equilibrium. Oh, I can see it now. I've seen it all day. Now I see it. They can do that or they can do that when FOMC comes out. So they're going to hang right here. All right. If it comes out positive, they're going to go up. Comes out negative, they're going to go down. All right. Watch for the double top tonight or this old day chart bottom top right here. That's the old day chart top. All right. Now, the higher probability is continuing the channel to the downside. All right. So your higher probability is the sell. But don't get married to that. All right. There we go. All righty.